Okay, quick preface. In this video, I want you to look for two big shifts in what Jerome Powell says. There are two big shifts, and you got to watch to the end of the video to catch two of the shifts that happened in what Jerome Powell said today. Let's get into it right after you get yourself 2 free stocks with Webull. Link down below. Deposit $100, get up to $1,850. We're in 2 free stocks with Webull. Go to metkevin.com/Webull. Hey everyone, me Kevin here. Jerome Powell just spoke at the International Monetary Fund on a panel moderated by Sarah Eisen from CNBC. Shout out to Sarah. We love seeing her when the closing bell happens. So anyway, folks, in this interview, we learned some more insights from Jerome Powell. Here's a summary of what was said. First, Jerome Powell complained that 8.5 million people are still out of work and that unevenness in our recovery is very serious. And Jerome Powell said, look, we had a good jobs report in March, but we don't just want a good jobs report in March. We want a string of good jobs reports to actually start seeing unemployment get back to even levels. So we want real progress, not forecasts. Unfortunately, today, what happened? Unemployment claims came in higher than expected. So we're still seeing that uneven recovery. And that's something that Fed Chair Jerome Powell says is very important, that we see an even recovery before having any kind of tightening. He also says that, look, it's not fair that basically the people who are the ones with the lowest wealth and generally the lowest amount of pay got hurt the most. Travel, leisure, hotels, restaurants. It's not fair. And that these people are even suffering trying to get back to work as companies decide maybe they want more technology and less people. This is something we talked about early in this pandemic, that this pandemic is going to lead companies to do tons of layoffs. They'll maybe lay off 20,000 people as an example, and then go, all right, we're hiring back, but we'll just take back the 5,000 that we cherry pick. I mean, think about it. Best job interview ever. The company already knows how well you perform. You got laid off and they just decide to hire back 1/4 of the people. They're probably going to pick the top performers of those 20,000 people. It was like the best reason to basically fire a bunch of people and then just rehire the best of the bunch, which sucks. That leaves a lot of people out of work. That leaves a lot of people in Jerome Powell's mind receiving potential scarring or even potential permanent damage to their entire lives as their job skills decay and their ability to find a new job that was paying even what they had before reduces. And Jerome Powell thinks this is very bad, and that Congress, and he specifically said this is not relating to any specific bill, but he said Congress should really be spending more focus on supporting the people who are hurt. Now, this is actually a big shift for Jerome Powell. Jerome Powell has regularly said, hey, I think it's not a bad idea to help people who need help, but that's up to Congress. Today, he actually came out and bluntly said, quote, we should continue to support those people at risk of labor market scarring. That's a big shift for Jay Powell. And then from here, we go into transitory inflation. How long is transitory inflation? So first part of what we heard is Jerome Powell saying, look, we want consistent jobs growth. We're not seeing that right now. We had one good report. We today had bad unemployment claims data. So we got to see consistent up. And we're not seeing that right now to even start thinking about or start talking about tightening monetary policy. But Sarah Eisen then hit Jerome up and said, look, how long is transitory inflation? Y'all keep talking about inflation that's going to be here temporarily and then it's going to go away. How long is that? And sure, Jerome Powell added some clarity. He said that in his opinion, inflation means persistent inflation, seeing prices go up 2 to 4% year after year after year. That's a definition of persistent inflation in the mind of Jerome Powell. So regularly seeing prices go up. He says that when we look at long-term inflation dynamics over the last 25 years, we've actually seen inflation go down, and that countries have had to deal more with disinflation, mature countries, I should say, like mature capitalistic and democratic countries have had to deal more with disinflation and low inflation, or trying to get to 2% inflation but struggling to do that, then over the past 25 years, countries have actually had to deal with large inflation. This is different, obviously, from less mature, maybe more unstable governments like you might find in Venezuela or Zimbabwe. And so that's a big contrast to keep in mind. And Jerome Powell says long-term inflation dynamics trend down. What we're seeing in the short term are supply bottlenecks. And Jerome Powell expressed frustration that the market seems very convinced that the short term is going to predict the long term. But what he's basically saying is, I'm going to draw a little comparison here. He's basically saying, we're on this raft that's flowing in this direction towards low inflation. But because of the whirlwind of COVID, where we've had all of these insane supply shocks to lumber, sheet metal, used cars, chips, circuits, graphic cards, certain foods. Remember at the beginning of the pandemic, meat was skyrocketing, right? Like a lot of things out and about have gotten more expensive. But Jerome Powell is saying, look, this is a short-term consequence of supply bottlenecks. That little raft that we're on has been, and I'm making this analogy, right, has been turned around. And now it kind of feels like the raft is going towards inflation. But the longer run current is going towards disinflation or lower inflation. And that at some point the raft is going to catch, supply chains get more efficient, and the little raft goes along the lines of lower inflation again. And that's his expectation. He said, quote, we think supply chains will adapt and become more efficient. But he gave us a time frame. He said it might take a year. This is what we talked about yesterday. In fact, yesterday, which I highly encourage you watch that video if you haven't yet, watch my Fed video yesterday where I go through this particular chart. I'm not going to rehash it here because I'm always trying to provide the latest info and the latest sort of way that Jerome Powell is describing things. A lot of people are very focused on what's going on with the Fed, understandably so, because it's a big market catalyst. But this little scribble scrabble right here, make sure to watch that in yesterday's video on the Fed. It'll be very useful, I think, in helping us understand what's going on. But look, don't get me wrong. I totally see what's going out there. I think folks think that like I'm crazy not seeing that prices are going up and not agreeing that, you know, oh, it's bullcrap that CPI doesn't really show inflation and everything around us is going up. Oh, but those things are conveniently not in CPI. I agree. I think it's bogus. Like I think the way inflation gets measured is crap. But every little thing that we look at, when we're like, and ask yourself this, even if you think big inflation is coming, seriously ask yourself, why are lumber prices up? Well, because real estate demand is through the roof and everybody wants to build a house right now. I experience this too. I got to buy lumber too. I'm renovating places too. It sucks. I feel it. You know, when the bills come in, I'm like, oh man, that's how much the lumber cost us this month? It sucks. I get it. And anyway, ask yourself individually, why is this up? Is it because of a supply chain issue? Or is this because we expect, like, look, lumber prices double. Do we think lumber prices are going to go up again next year or down? What usually happens, like in the stock market, after something goes skyrocketing, parabolic? It usually comes down again at some point in the future to find an equilibrium. The same is going to be true of a lot of things. I don't think we're going to see lumber prices constantly go double and then up another 50% and up another 30%. I think it's unlikely. Anyway, moving on to what Jerome Powell says. Jerome Powell also changed his verbiage a little bit on inflation, and this was interesting. Usually he's been saying, we don't think inflation is going to happen. But this time, he actually said, we don't think inflation happening, like over 2%, is, quote, the most likely outcome. It's kind of a change in his verbiage a little bit. He's leaving that door open a little bit more lately to look, maybe there will be inflation. So that is an interesting shift that I did pick up on, which I know is a little bit counter to what I just talked about. But I give it to you straight both ways, okay? I think Jerome Powell is doing that in a way. I don't think he's doing that because he thinks big inflation is coming. I think he's saying that because he knows the market wants him to address it. So he's saying, look, yeah, there's a chance. We don't think that's the most likely, but if it happens, we have the tools to deal with that, to guide inflation to 2% if the need arises, he says. Sarah Eisen then nailed him with like the best question. She goes, well, what would you do? Would you raise rates? And he goes, well, yeah, that is that is the principal tool we use when there is inflation. So in other words, if there's inflation, the rates are going up faster, which is what the market is anticipating. But then he did reiterate, though, that's not what he thinks is the most likely outcome. He says, again, we focus too much on the short term. We need to focus on long-term supply side decision making. And then he also says we need to invest in making this recovery more inclusive. So definitely some changes here. Very interesting. But anyway, thank you so much for watching this video. Make sure to get yourself 2 free stocks with Webull. Use the link down below or go to metkevin.com/Webull. Get 2 free stocks worth up to $1,850. And folks, we'll see you in the next one.